Welcome back there, ladies and gents. Welcome back. You know what time of day it is. My name is Joseph James. Welcome back to our live morning prep this morning. I'm here with my good friend and partner, Marty Errico from Traders Audio. And welcome to our crude oil squawk, our very dynamic and I think one of the most unique ways to begin your morning every morning. Trading crude oil and natural gas futures here. We're going from the screen to the trading floor. My name is Joseph James. I'm a technical analyst with SchoolOfTrade.com. You can come out and see me every morning at 8 a.m. Eastern Time. I run a live trade room with members from all over the world. I'm a technical analyst, so I'm looking at charts, right, looking at news. And, of course, I'm going to be helping you today with a top-down approach, starting with some slower chart time frames and moving all the way down to the faster chart time frames. Specifically this morning, folks, I'm going to be analyzing what's happened overnight and what's specifically coming out of the London trading session. Now, I'm here trading the U.S. morning session, so I'm going to be focused on what happened in the previous trading session, which of course would be the London session. My job is pretty simple this morning. If I can anticipate direction at the open, I can identify high percentage trading opportunities that are going to begin at 8 a.m. Eastern Time. So it's pretty simple. Take a look at what happened overnight. Try to anticipate direction at the open based on what happened overnight. Add in some important price levels, which will give me those high percentage trading opportunities. Guys, we're going to get opportunities every day to participate in these markets we trade. They're open pretty much 24 hours a day. My job is to help you guys identify where the highest percentage opportunities are. Now, you're going to hear from Marty Errico when I'm done. And of course, as soon as I'm done with charts here in Los Angeles, I'm tossing it all the way across the country. I'm going to talk to our good friend Marty Errico from Traders Audio. He and his partner Jeffrey, they start their broadcast every morning at 8:50 a.m. Eastern Time. Give him a shout. They can do a great job every morning broadcasting live from the NYMEX Exchange. And Marty's going to provide us with what I think to be one of the most unique ways to look at this. I'm going to talk about charts. Well, Marty's got his finger on the pulse on the trading floor. All right, very different environment in the trading floor than we see on our screens. And, of course, Marty will be talking about market direction, intermarket divergence, market internals, the important option prices that he's seeing right now, and, of course, those always elusive and very important pit session trading levels. Now, we're going into contract rollover here this morning on crude oil. Marty will be talking about that. And, of course, I'm excited to hear if Marty agrees with what I'm seeing on my end. Now, before I jump into those charts here this morning, I want to remind everybody that every morning, usually before we get started, I've got this, our blog, our Crude Oil Squawk blog has all of the charts, including today's news and the commentary. Now look at the bottom here and you'll see here we've identified a few trading opportunities for you guys this morning. Again, come out and join me in my live trade room and I'll give you a lot more opportunities than that each morning. You can find a link to this blog by going to the Sideways Markets blog, right? Sidewaysmarkets.com, and this is a page that we've added to that. All right, enough out of me. Let's look at some charts. First thing I want to do this morning is grab a look here at the news today because this is going to be, in my opinion, one of the most important aspects of our morning. Now, we talked about this yesterday, right? We talked about the fact that we had OPEX. We always begin our morning in our trade room by talking about what day of the week, what week of the month, what month of the year. So what day of the week are we right now? Today is Thursday. Okay, nothing too spectacular unless you're a natty gas trader. You've got inventories today. All right, well, what week of the month are we? What week is this? This is the third week of the month. That means this Friday, tomorrow, is the third Friday of the month. That means we have OPEX. Okay, so today is Thursday of OPEX. We call it Thirsty Thursday. Wacky Wednesday was yesterday. OPEX Friday is tomorrow. Thirsty Thursday today because, of course, we cannot wait to get OPEX out of the way and get some better price action. It hasn't been that bad. It's been definitely, the next thing we'll talk about here, though, is the most important thing. So we know that the day of the week of the month, what month of the year is it today? Anybody remember what month it is? What month is today? Today's, right, the month of July. The month of July is what? It's a summertime month. What does summertime month tell me? Summertime tells me get in early, get out early, take that money and run. If we expect to see a 100-tick runner on crude oil in the normal conditions, it'll be a 75-tick runner in the summertime months. Okay, so narrower ranges, a little bit less volume. This reminds us we are in a Thursday of OPEX in the summer, right? Red flags are firing off everywhere right now. And then last but not least, here we are Thursday morning here. Looking at news, we got jobless claims, Ben Bernanke, Philly Fed. What's the next big red flag we see here today? Big red flag, what do you see here? We got Mr. Ben Bernanke. Ben Bernanke is going to have all eyes and ears on him. Most likely will be the same thing we saw yesterday morning. We talked about this yesterday morning. We expected to see a range-bound market. We expected to see a little dose of analysis paralysis. And we knew that after 10 a.m. yesterday, we were going to get most likely our best trading opportunities. If you remember yesterday morning, if you read our morning newsletter yesterday, if you're reading it again this morning, we talked about how expect him to put his foot in his mouth a few times after 10 a.m., and that's when we're going to get the best price action today. And boy, did we get a chance to really get short on gold yesterday morning after Bernanke started speaking. All right, bottom line, what does this mean for crude oil and natural gas traders? We know we got jobless claims. Jobless claims, a very important news event this morning. This is going to have an impact. This is one of the most important jobless claims numbers of the year. This one's going to be factored in with the next non-farm payroll report, and this, of course, will be one of the last ones we get here before we go into the holiday season at the end of the year. Jobless claims number is unfortunately, though, going to be overshadowed by Bernanke again today. Had a lot of volatility off of his comments yesterday. We're hoping for the same thing again today. We've got two Red Star news events, right? We got kind of a Bernanke sandwich here this morning between two Red Star news events. That sounds like a horrible sandwich, by the way. I would not recommend that. The Philly Fed survey is personally one of my favorite news events. The Philly Fed survey is a sleeper. I'll tell you right now, this and the industrial production, these are two really great news events for crude oil traders. Okay, Philly Fed is really very simple. It's the manufacturing survey coming out of the state of Philadelphia, right? Pennsylvania, excuse me. Last time I checked, that was the state, right? I'm kidding with you. So we know we have 8:30 major news. We've got 10 o'clock major news. These will be two Red Star news events. Red Star news events, remember, we always want to identify a day that has a Red Star news event. Why? A Red Star news event tells me I can expect a big runner today. A Red Star news event tells me be on the lookout for some serious volatility, and once we find a direction, trade in that direction. Okay, because these Red Star news events, they're always resulting in the most amount of people participating. So be ready for some action today, but just be aware if we start to see some range-bound trading, you know who's to blame, our good old friend Helicopter Ben. Be on the lookout here, though, for opportunities after 8:30, and I would say as late as most likely 11:30 this morning as traders react to Ben Bernanke. We'll have to really wait, though, and be patient today because we really don't know what the market's personality is going to look like until we get there today, again, with Ben Bernanke in the microphone. Enough about the news here now. Now that we know about what we're expecting today for the news, let's take a look at some charts. Looking over at crude oil futures this morning. This is a 60-minute chart. I've got about 180 days of data loaded on it. And boy, did we do a great job yesterday morning, folks. If you were paying attention, if you were listening in yesterday morning, we talked about buying the 105.19, winner. We talked about selling the 106.74, winner. Now, of course, this morning we are sitting inside of this no trade zone. If you took our guidance yesterday, you made some great money yesterday morning. If you'll take it again right now, I would highly recommend we sit on hands. I'm in the no trade zone at this time, clearly in the middle of this price wedge. I don't want anything to do with the middle of these wedges. I'm going to wait patiently here now to buy that 105.46. If we can get down to the 105.46, I will buy it, and just like yesterday, take my profit at the highs, sell it, profit at the lows, right? You know the drill. Price wedge is always one of my favorite price structures. As I always say to our students in the trade room, if I could trade one price structure for the rest of my career, it would be a price wedge. I can use Fibonacci to calculate it. I can define easily where my ranges are, and I know exactly what my plan of attack is whenever I see a price wedge. You want to know what the hardest part about a wedge is? The most challenging part of a price wedge is patience. Patience not to force the trade too early in the set, right, or too close to the middle. So avoid that middle, buy those lows, sell those highs. That's also, when we go in and zoom in now, that's also one of the most consistent, that's probably going to be the best advice we can give you all day today. Buy the lows, sell the highs. Again, this chart is right on the blog, posted for you already this morning, so you can see the levels we have here. One of the first things we notice on this 5-minute chart, folks, look at that narrow range, that narrow trading range coming out of London. And again, remember I talked about earlier, my job is to find clues in the overnight trading session. Okay, well, I'm here in the U.S. It's almost 8 a.m. Eastern time. What's the overnight for me? The overnight for me will be midnight to 7 a.m., right? That's the overnight session for the U.S. traders. If you were trading in London, the overnight session for you would be coming out of Asia. So we know now that the range-bound market, the price wedge, the two-sided trading, buying the lows, selling the highs, that's going to continue here on our 5-minute chart. This is where we begin to find those specific price levels. Let's prep here for it real quick. What's the first thing we see? The narrow trading range. The second thing that I notice is that we are trading inside the range from yesterday. Members, that should be a big clue. We should be hearing fireworks going off, right? Inside the range from yesterday, what does that tell me? The market is in balance. Okay, think of the previous high of day and the previous low of day. Just like the market profile traders will use the value area high and the value area low. If I'm above the previous high of day, I'm bullish. If I'm below the previous low of day, I'm bearish. If I'm inside of the range, right, I'm neutral. Okay, very similar to market profile theory. In fact, I base a lot of what I do trading ranges on the market profile theory, although I don't use the market profile bracket. Now you can see here we've got the reversal zone. As we go lower, I'm going to buy the reversal zone. We have a PRZ trade here at 106.05 on crude, 106.05 for a buy. 15 tick stop on it, 45 tick target on that buy. If we get below that 106.05, we then start to move lower. I will wait to buy the lows here at 105.57-ish. You can see here that trend line may end up a little bit higher if this happens a little bit later on in the morning, and I will be looking to buy the low of that wedge. If we keep going, I've got that previous low of day down at 105.11, very important spot here at 105.11, and I'll look to buy the lows there as well. As you can see, I'm not going to be focused on selling short with a breakout. I'll be focused on waiting patiently so I can buy the lows of that range. Similar to the upside. Now, a lot more room to the downside. If we jump to the upside, we immediately run right into a trend line. We immediately run right into that reversal zone. And again, another PRZ trade here at 106.61 this morning. I do have the previous high of day up here at 106.73. Okay, I was looking for a short there. One of my favorite trade setups is the inside-out setup. If we can get above the previous high of day, once we fail, look out below. I will be selling that short. I've got additional trend lines here overhead. And, of course, we have that previous high of day up there at 107.18. That's going to be a weekly high up there. And, of course, we will look, of course, at that point to make it another educated decision. If we start to see this price really take off, either the upside or the downside, at some point here, folks, if we break out of this price wedge, at some point here, again, we have that big variable hanging over our head right now with Ben Bernanke and 2 Red Star news events. If this market happens to take off to the upside or the downside, eventually we're going to have to abandon this two-sided trading strategy, and we will start buying pullbacks or selling retracements. So keep an eye on market personality. If we're seeing sideways slop and chop, which of course we'll be talking about today in our trade room, if we continue to see that sideways slop and chop, I will be trading by buying the lows and selling the highs. If this does start to trend today, after Bernanke gets on the microphone and after we start seeing some major news, I will then, of course, adjust that strategy, buy pullbacks with new higher highs and sell retracements with new lower lows. All righty. Yes, as always, we do have a reminder here this morning. It's after the 15th of the month, so we do have contract rollover. Contract rollover will be on our radar today. All right, so make sure you guys keep an eye on that. If you're watching your volume here, open up your market analyzer here on NinjaTrader. Take a look at the crude oil futures contracts right now, and you can see we are still trading volume here at the 813. We still have the 813 contract is still in charge. We could roll to the 913 here this morning if you wanted to. It's probably not going to make much of a difference. One of the concerns we have, of course, though, is whenever we're sharing volume, that means that there's less volume on each of the individual contracts. So it's looking like a sideways range-bound day here in front of me today. It's looking like another sleeper ahead of Ben Bernanke. We got some major news in front of us, but I'm curious to hear what Marty's thinking. I'm curious to see what he's got on his schedule this morning because, you know, it's a lot different out there on the trading floor. Marty, what are you seeing out there, my friend? Are you seeing the same sideways range? Is it as quiet in the pit right now as it feels like it is on the screen? Good morning to you, my friend. How are we doing?
Hey, good morning, JJ. Yes, pretty much as quiet as we can see it on the screen in the pit, same thing. We've been watching, of course, roll. We've been watching the roll activity since the 5th business day of the month. So, again, the pit, they roll the 5th business day up to the 15th business day of the month, and that's when they make all their money. So we've been watching that roll activity. Again, we're going to be in the front month SEP. We'll call it tomorrow. If you look real quickly, yesterday, options expiration, right? We had OPEX for the August contract at 2:30. The options went off the board, and the variable in play here was rallying into that close, right? Was a very powerful observation. We see that we rallied all the way up to 106.5, and that's where a lot of the money was placed. Again, when I always look at the options, I like to pull up a chain, and I like to see where the most money is placed. And in the Augie contract, that's where all of our options traders needed their contracts to settle at, right, to make any money. So you can see they end up settling up at 106.5 yesterday, and that was very powerful. In terms of rallying into the close, I mean, that inventory number yesterday was enough to make us rally, I believe, and really expect a little bit of a pullback. I'm thinking just a bit of a pullback overall, and then we'll go higher and trade all the way up to about 110. Again, just watch for just a little bit of a pullback. I'm talking on a little bit of a broader base kind of time frame, guys, so just probably not today. But again, overall, very powerful observation yesterday. Options trading, closing, expiring, and boom, rallying into the close. Very big. So 110, hedge your long positions if you guys are long. Again, expect the pullback in the next couple days, and then I would really be hedging our long positions. Again, buy a put or just maybe selling out month or something like that, you know. Overall, you can see kind of same scenario as JJ was in. Let me show you just a chart real quick, and then we'll get to all of our suspects. Yeah, you know, here's the wedge. Very clear defined wedge, and that's really been the whole thing. Now we're narrowing up, and again, we have to look to sell the highs. Again, I got 106.73, I got 107.18 and 107.45 to sell. If not, we'll be buying here now. The 105.09, right? I got 105.70 was very, very, very important level to keep an eye on. We saw a lot of stops, buy stops at 107. Really 105.70, right? 105.70. We saw it at 105.60 and 105.5. A lot of buy stops in there. I got the local market makers coming in and buying it, so there's a lot of buy stops at that level of those series of levels. But really, the main thing is going to be 105.5. If we can get below 105.5, yes, then we can trade this plan right here. Otherwise, I'm going to be looking to buy if we can stay above the 105.5. Again, and get back up into this channel here and trade within the channel. You got to go back, you know, just to see if the channel's working out. But you can see very well-defined channel, right? Let me fix the chart. There you go. Very, very well-defined channel. And again, we are towards the lower end of the channel. Like, we bought this support below the channel, and now we're going to be looking to trade up higher again, up to that 107, right? We got 107.18, 107.45, 108 even, right? And then I got even 110, 112. In the pit, they showed their hand, locals and paper. Paper ended up buying here into the closing bell, and they were very aggressive buyers, and paper's now net long. Larger locals pretty much sideways again as they roll, kind of just a bit. Paper pretty much reestablishing some long positions into the close yesterday, and that gives us that indication that we could see higher prices if we stay above the 105.5. So again, I talked about the lows here showing buy stops around the 105.70, 105.60, and 50. I got those market maker locals and those market maker order filler locals that were coming in and buying for their customers. So once they hit that level again, if we see those buy stops get triggered, then we can definitely see some upside activity. Let's just take a look here across the board. I got your crude RBOB heating oil. Right now, they're pretty much all sideways. Again, you can see on here, guys, look, all sideways. So again, got really no trend here in terms of just where we're going. Again, I got all sideways activity here for the most part. Looking at your supply-demand differential, we're looking at the calendar spreads. We're looking at the Brent to WTI spread. And right now, giving us somewhat of a bullish indication this morning right now at the moment. Again, I got the Brent WTI spread overall trading around $2 in the SEP to SEP, right? SEP to SEP spread. 204. It's in contango by about 22 cents. So overall, a bullish indication from the Brent and WTI spread. The Brent WTI spread, Augie to Augie contract, 285, and it's just kind of sitting here unchanged on the day. So I'm going to be looking at that SEP to SEP spread to get an indication. That's bullish. Calendar spreads this morning here. If you look with me, you'll see the Augie to SEP. There's only 15 cents. We've been drifting around anywhere from 10 to 20 cents, really. But again, we got about 15 cents right now on that spread, and that's only a 15-tick difference between the August and September price. So right now we are in the middle of the roll. I'll be quoting front month SEP tomorrow. We're still in Augie right now, even though that those usually I wouldn't quote Augie because we just got rid of the options. I'm going to go against that just for one day, and we'll be in the SEP. But again, keep in mind we're September front month options. Okay, so as I mentioned here, we do have now just a little bit of a bullish indication. We talked about the fact that the spreads are rather tightening across the board as we look at the Augie SEP, Augie DEES, right? Augie Novi, Augie October, right? All of our spreads are in contango. Bullish indication, ladies and gentlemen. Again, that's what it simply means here. So now, as we were speaking about news, right, we have a bunch of news here today, and the most important factor that I want to first take a look at, right, is going to be the natural gas number. I really don't care about the jobless claims. I mean, yes, it's going to move the market. They're going to be potential market movers. Yes, it's going to affect the dollar, and right now on that dollar index, look at this. We have a risk-on sentiment here, right? The dollar's a little bit higher. Crude sideways to lower today, but again, I think we'll get a shift in the dollar, right, in all of our currency differentials, as you can see here, right? Dollar is just a little bit higher. We have euro lower, and we do have a risk-on sentiment across the board. If now we're going to take a look at that very important news that I spoke about here, again, that is going to be our inventory numbers. We have natty gas inventory numbers, and we're going to get the natural gas natty gas inventory numbers today. Range right now, guys, the analysts are expecting just about 64 BCF. So that simply means if we get a greater build than expected in the inventory numbers, right, greater build than expected above 64 BCF, we will be selling, right? And if we ended up getting a lesser than expected build or some type of draw on the market, a negative number, that will be bullish. So again, above 64, we're selling. Below 64, we're buying. And that's pretty much it for the natural gas numbers. As you can see, natty gas is going to have a fit opportunity to get a really nice trade. You can see, guys, we have been now trading right, really consolidating in our wedge, right? So now we're chopping it up just a bit. Now we're going to break out in either one direction or another. So keep that in mind. So we're going to be waiting for a breakout. Again, I got some levels here for you. If we do get a build, right, larger than expected build, we'll be selling below 357 and 355. If we get some type of draw or a little bit lesser than expected build, then we're going to be looking to buy up above, right, 370.20, 373, 375. Again, we're going to try to get up to that 375. So keep an eye, again, keep watching the manipulation beforehand, as that's always a big factor. Again, they always usually push the natural gas in a particular direction before the number, of course, is always the case. So that is going to be a big factor that we want to take a look at and really kind of pay attention to, as that's going to be very important, right, to be able to see that. So I want you guys to keep that in mind and say, hey, you know, these guys like to push it in one direction before the number. So that's going to be pretty important to keep an eye on. Guys, I got some levels for you here on the crude. First, I just want to talk about volatility. Volatility is holding firm. Look at this SEP. Implied vol, if you want to get a reading on volatility in the OVX, and for the natural gas, if you want to watch volatility, you have to take a look at that Augie vol, implied vol, just to remind everybody as we are in the roll. So that's the plan of attack for natural gas. Let's now take a look at our levels here. Crude yesterday, pit session high, 106.52. Your low, I had 105.62. So again, 52, 106.52 to 105.62, a 90-cent trading range yesterday, very kind of thin, and we can probably expect a little bit of the same today. Guys, I got your closing settlement number from yesterday, 106.5. Daily pivot today, 106.21. Resistance up above, I got 106.80, right? 107.11 and 108.01. Support down below, I got, right, that 105.90, the 105.70 that I was telling you to run stops at. We have 105.30. 104.41. Overall open interest here currently stands 122,478 in the Augie, and the SEP were 300 and what's that? 340,757, and that's what it says. Yeah, that's what it says on there. So again, we've been watching now just open interest kind of rising here in this month. Again, showing that some shorts could possibly get into this market. Overall, ladies and gentlemen, again, they do show a lot of interest in the 105, 108, 110, 112. Calls to the upside over 4,000 times in the pit yesterday. Downside 105, 103, 100, even in 95 puts all trade in the Augie. Again, now as they roll into Augie, this is from SEP to Augie. Keep in mind, volatility 24%, holding steady and firm. If vol can still stay firm, this is going to be bullish for us. And as we kind of continue on, you also want to keep in mind that we are pretty much here sitting in a little bit of a range, looking for the breakout. Natty gas, pit session high, yet from yesterday, write these levels down, 366.20, right? 366.20, your high, your low, ladies and gentlemen, 360.07, right? 360.70. Close and settlement number, 363.20. Resistance up above, I got 366.10, 368.90, and 374.40. Support down below, I got 357.90, 357.90. Okay, hold on. I have 357.90. First, sorry guys, this is going to be 360.060, right? This is going to be 360.60. This is going to be 357.90 and 352.40. So again, those are the levels here. Overall, open interest 102,633, and that's really what I just want to look at. The SEP I have up there too, but I'm going to really focus on that open interest for your Augie. Alrighty, guys. Overall, implied vol 31%. A lot of interest here in that 355 call and in the 370 put as we kind of just sit there in that range. But again, we're going to watch for that breakout here of the range. All right, guys, that's about it. I'm going to throw it on over to JJ again as we are ready to rock and roll here on a Thursday morning.
Thank you so much, Marty. As always, great job out there today. I'm glad to see there's a little bit of confluence between you and I this morning. It sounds we got a quiet morning here on the crude oil front, but a very exciting morning ahead of us for all the nat gas traders out there. So if you're trading nat gas, you've got some great opportunities here this morning for all you nat gas traders. And guys, I want to remind you all too to log in and listen to Marty and his partner Jeffrey over at Traders Audio this morning. They'll be broadcasting live from the natural gas pit as that news is released. Give Marty a shout over there at marty@tradersaudio.com, and he'll give you all the information about how to join him on his broadcast today. As for me, I'm a lonely old day trader here with our community of traders at SchoolOfTrade.com. Hit me up at JJ at SchoolOfTrade. I'll see you guys in my live trading this morning starting in just a few moments. I want to thank each and every one of you guys for coming out and joining us today. Thank you so much for being a part of this call this morning. Do you have any feedback for me? Got any feedback for me? Give me some feedback. I'd love to know what you like, what you dislike, what you would like to see added, or what you'd like to see removed from every morning's broadcast. Don't forget to use the blog. It's got all of our charts every day. And keep an eye out for a brand new rollout of a new website in the very near future. Have a great day out there. Don't forget about Ben Bernanke. Got our first news event at 8:30 this morning with jobless claims. We'll catch you guys here tomorrow. We're on a 23-hour and 30-minute break, and we'll see you guys for a finally Friday edition of our Crude Oil Squawk Morning Prep. We took it from the screen to the floor this morning, guys and gals, and we'll catch you here again tomorrow. You got to learn it so you can earn it. We'll see you in the morning. Adios, amigos. Bye-bye for now.